Today is Monday, April 10th, and this is the ADM Investor Services Weekly Market Kickoff. Today's guests are Alan Bush, Senior Financial Economist here at ADMIS, and Steve Freed, Vice President of Grain Research. Alan, why have stock index futures held up so well in spite of non-farm and private payroll numbers coming in weaker than expected on Friday? And is the Federal Open Market Committee still on track to hit its Fed funds rate at the June 14th policy meeting?
Well, basically, the stock index futures have held up extremely well, with the potential over the last few days for them to decline rather precipitously, but they haven't. So that in itself suggests that the main trend is higher. And what we have to look at is the interest rate environment, which still remains very accommodative, even with one or two more rate increases likely from the Fed this year. So our analysis is that low rates will continue to support the indices, and we would expect additional gains across the board for all of the major stock index futures.
Last Thursday, gold futures advanced to a 5-month high. How can gold futures remain firm in spite of the Fed likely to increase its funds rate over 1 or 2 times this year?
Well, this is almost the same answer. Interest rates are still low enough to sustain a bull market in the precious metals. Plus, we have the inflation influence, which is increasing, and we have the geopolitical problems that are ongoing. So you combine all those things, and we have the basis for a long-term bull market in both gold and silver. So nothing has changed. Continue to trade these two markets from the long side. This is just beginning as far as a bull market for the precious metals.
Since the 66-cent rally in copper futures that took place in late October through December of last year, futures have been in congestion pattern between 2.45 and 2.82. Which way will futures break out of this congestion pattern?
Well, the rule of thumb on congestion patterns basically is whatever the direction is that prices came into a congestion pattern, that is the direction that they will probably break out of. And that's true about 60 to 65% of the time. So we came in to the upside, and I think we'll ultimately break out to the upside. I'm not sure exactly when we will see this break up. I would expect it would be within the next month or so. So trade copper from the long side as the global economy continues to improve. And I think there's a lot left also in the copper market, in the bull market that we are in now.
Steve, the USDA will have a monthly supply and demand report tomorrow. What's the market expecting?
A little bit of differences based on the commodity. In the beans, we're expecting the Brazil soybean crop to be raised again, and that could lower U.S. demand, which could raise our carryout. So the report should be bearish to the beans. In the corn, they could actually raise the feed and residual number based on the March 1 stocks and lower the carryout. And for wheat, we expect a slight increase in the carryout due to a lower feed number.
It continues to rain in Argentina. Is this a problem? And this week, the U.S. Midwest could also see rains. Is this a problem?
Well, the market has kind of a short memory as Argentina, because last year the rains really hurt their crop late in the growing season during harvest. So commercials are a little bit nervous about this, and we'll have to see if these rains continue and the impact it could have on the crops down there. We started out today a little bit higher in the beans and meal to put a weather premium on that, but I think the market still has to get through the report tomorrow and a little bit more information about the rains in Argentina. As far as the rains here in the United States, it could rain this weekend and slow the plantings of the corn crop. Now, some people think that it'll be until April 25th until we actually can get a lot of corn started planting in the Midwest. I don't think that's too late, but I think we have to watch the weather after that. And corn is putting a little bit of weather premium on the market today.
Funds are not short soybeans and have added to their corn and wheat shorts. Why? And can they keep these positions into the summer?
I think that there was a lot of buying after the election in November that came in and hopes that not only could we see some type of weather issue or demand issue, but also an inflation issue. And I think that some of the, at least in the grains, some of these traders are taking those positions off. And we really don't have a global weather problem yet. Demand is still good, but all the carryouts globally are going up. And so I think that it's going to take a weather issue this summer across the U.S. in order to get these funds out of these short positions.
Please remember that the opinions expressed here today are solely the opinions of our guests and are not necessarily the opinions of ADM Investor Services or Archer Daniels Midland Company. If you have any questions or comments or would like to know more about our services, please contact us at www.admis.com.